Good morning and welcome back to the Monday morning mortgage market update. It's been a couple of weeks since the last time we did one of these, and today we're not just catching up, but we're looking ahead to what the market's got to offer for 2026. 2025 was fairly muted, but 2026 is shaping up to be a lot more interesting. So let's start with the housing and property market and let's take a look at the big picture. 2025 saw a sharp decline in house price growth. So let's take a look at that headline data that everybody loves to argue about. Nationwide is showing that in 2025, house prices grew 0.6% across the country. And this is the weakest annual growth we've seen in a few years. And we also saw a month-on-month price slip into December, which kind of tells us the market's definitely cooling a bit. But this isn't a house price crash. The market's taking a breather. We've had high mortgage rates, we've had the cost of living crisis. And a lot of that's starting to ease now, which should bring back the energy from buyers. And whilst nationally we saw a cool down, the north was continuing to do its own thing. The average house price in Edinburgh is forecast to hit $360,000 in 2026. And this is being driven by strong demand and tight supply. And it's a great reminder that there's no one single UK housing market. What's happening in Edinburgh certainly won't be the same as what we see around Leicestershire, Northampton, Warwickshire, or generally in the East Midlands at all. Pricing in the East Midlands tends to be a lot more affordability led. So where do we really see the market going in 2026? Industry commentators are suggesting that the market should improve going into 2026. Buyer inquiries have steadily been ticking upwards. Confidence is stabilising. And we may well see the return of some of those people that have been sat on their hands for the last couple of years. Generally speaking, people never stopped wanting to move. They just put it on pause. So now let's take a look at the mortgage market. And despite the snow outside, things are really starting to heat up. We've already seen HSBC becoming the first major lender to cut rates in 2026. And this is following on from the Bank of England's base rate reduction back in December. And historically, when one of the big players moves, the others follow. So this could very well be the start of a more competitive pricing cycle. We'll need to wait and see. But looking ahead, there is growing expectation that mortgage pricing is going to see downward pressure in 2026. And it's being driven by three things: base rate expectations, lenders competing harder for business, and improved funding conditions. And it doesn't mean rates are going to fall back to some of the silly numbers we've seen before. But it does mean that borrowers should have more choice and better value than we've seen recently. Combine that with Rightmove forecasting 2% house price growth across 2026. It's nothing dramatic, but when you look at it in combination with mortgage affordability, it could well help to create much more favourable conditions, especially for first-time buyers. And as always, local markets will all behave differently. And this is where tailored advice really matters. So if you're a homeowner coming to the end of your fixed rate, you're a first-time buyer waiting for things to improve, or even someone planning a move later in 2026, this is exactly the sort of market where timing, structure, and lender choice are going to make all the difference. So as we move into 2026, I'll keep breaking all of this down. So make sure you give me a like and a follow to keep in touch with what's going on. Every week I'll be here to tell you what's noise, what actually matters, and how it affects real borrowers, both here in the East Midlands and beyond. I'm Patrick Weightman, your local East Midlands mortgage and protection advisor, serving clients up and down the UK. Make sure you give me a like and a follow. Links are in the bio if you want to get in touch. Thanks a lot. Bye-bye.